Welcome to the Market Matters video update. I'm Matthew Snodgrass. Great to be here as part of the Market Matters team and my first time on camera. I'm joined by James Gerrish. We're going to talk about the month of September, how it played out for the portfolios in terms of their performance, as well as some of the macroeconomic trends that played out during the month.
Matt, firstly, great to have you on board to the Market Matters team. All our members, subscribers and readers will get to know Matt over the coming weeks, months and years as his involvement increases through the platform. So great to have you on board in what's a very interesting period in markets. So September had a lot playing out in terms of markets from a macroeconomic policy standpoint, both over in the US and more recently in China. That obviously dovetailed into a really interesting period in the ASX. So I often say that on our monthly videos, but I think September really fit the bill there. We started with a focus on US monetary policy. The Federal Reserve went and cut interest rates by a more aggressive 50 basis points, and then the month ended with China coming to the party around policy, big policy action over there. We've been writing about it. It's their whatever it takes moment, which is changed the landscape on a lot of areas, particularly with China-facing equities, resources in particular. So we're going to get into that and more as we run through the portfolios, Matt.
That's a lot to take in, a lot happening during the month. So how exactly did that translate through the performance for the portfolios?
So regular viewers of the video will understand that we've been talking in the last couple of months about resources being a weight on our portfolio performance. That certainly turned around in the month of September, which is really encouraging to see. We've been preempting, I guess, a move back into resources earlier than it actually played out. But this, as I said before, this change from China is a pretty meaningful policy shift, and it's played into our positioning. So the flagship growth, the active growth portfolio, I should say, Matt, was up 6.68%. The market overall for the ASX 200 accumulation index was up 2.97%. So that was outperformance of about 370 basis points. If I look longer term, and you'll see this on the screen in front of you, on a 3-year view, the portfolio is up just shy of 12%, and from inception, it's up a bit over 14%, which is about 4.5% above its benchmark. So I'm really happy with how that portfolio has performed in the last month, obviously, on a longer term basis. We've had a few softer periods in between that, but we're really comfortable about how that is set now with what's playing out in China. Active income portfolio, our more defensively set, lower volatility, higher income portfolios designed for sort of the medium risk investor out there. It was up 4%, 4.13% for the month. Good result there. It's got an RBA cash plus 4 benchmark, so about 3.8% above the benchmark return. On a 1-year view, it's up 11.4%, again about 3.5% above benchmark, and from inception, it's up nearly 9% per annum, again about 3.5% above benchmark. International equities were a really interesting area of the market this month. So we had strong outperformance in the portfolio, up 3.2%. We bring that back into Aussie dollar terms, so the currency was actually quite strong. So the currency actually detracted about 2% from returns over the course of the month. So the underlying portfolio had a really stellar month if you remove the impact of the currency. So that was about 3.5% above its benchmark. 1 year, that's up nearly 17%, slightly behind its benchmark for the 1-year perspective, but from inception we're up 17.5% per annum, which is nearly 5% above benchmark. I know it's a mouthful, but I'm getting to the end of it. Emerging companies. This is the area of the market that we're still struggling with. Although September was a strong month for the portfolio, it was up nearly 7%, above its benchmark by nearly 2%, and from inception we're still running about 1.7% above benchmark since inception. And then our newest portfolio, the core ETF portfolio, more of a diversified, balanced approach to a portfolio construction. It was up 1.7, is ahead of its benchmark, which is the RBA cash plus 3%. 1 year it's up nearly 17%, well ahead of its benchmark, and inception it's up 11%. So wrapping all that up, Matt, a really solid September. Portfolios bounced back really nicely after a couple of difficult months going into September, and we're comfortable with that positioning.
Great. All right, markets that are all-time highs. What do we see? Is there any juice left in the tank running into Christmas?
That's obviously the question that everyone wants answered, Matt. I think I don't shy away from markets that are at all-time highs. I think there's reasons why equities have been strong. If I stand back and think about the landscape that's playing out, so the data that we've got to hand. So over in the US, we're seeing growth cool, but not by a lot. We're seeing some softness come into the employment situation, but not a lot. We're seeing inflation come back in towards that target range, which is a really positive thing. That opened the door for that 50 basis point cut over in the US at their last meeting. We're now looking to the next meeting. It's probably going to be a 25 basis point cut. But I guess the takeaway there is interest rates are going lower. We were writing that we thought the market had gotten too aggressive on interest rate cuts. Their expectation around cuts going out for the next 12 months, they were pricing circa 8 to 9 cuts over that time period. We're now pricing in circa 5 to 6 cuts, which we think is about right. So US economy, on the data we have to hand, it's going into that soft landing scenario. That's bullish for equities. Then you overlay that with China. So China, whilst they haven't yet produced a lot of detail around the fiscal policy settings they're going to enact, they've given detail around monetary policy standpoint. The fiscal side is the next thing. But I think it's the key point there is that they've shown their hand. They've had a significant change of rhetoric and focus on achieving their 5% or thereabouts target. So we think that's a game changer, and you can see that in China-facing equities around the globe. And the way investors are sort of positioning around China, it's been quite bullish. So we think that continues. Ultimately, you boil all that down and you've got to stay positive on equities here in the ASX. So we're bullish into Christmas. Our portfolios are set that way. But obviously, we keep our eyes open. If those data points change, then we'll amend our positioning accordingly. So hopefully the strong portfolio performance in September can keep running into October, November, December, and onwards from then. And so yeah, really comfortable here, Matt.
Great. All right. Well, that's a wrap. Thanks for joining this month's edition of Market Matters Video Update.